Paddy, thank you so much for joining me on the show today. It's such a pleasure to have you here. I wanted to reach out to you after coming across Odin through a opportunity that got sent to me. Once I checked out the platform, I just had to reach out to you to learn more about it. So first of all, thank you so much for coming on the show.
Well, yeah, look, thanks very much for having me, Nick.
Before getting into Odin itself, I always like to talk to founders about their backgrounds, and I want to know more about your background before you joined and set up Odin.
So, grew up in England, born in a place called Scunthorpe in the north of England. My family's all Irish, so my dad's from Dublin. Which it sounds like you're from somewhere not too far from there.
I am indeed. I'm from Dublin, born and bred.
Right, all right.
Just to the north.
Oh, really? He's from Stillorgan anyway. And my mum is from Antrim. They're doctors. They moved to the UK in the 80s. Obviously, there wasn't actually a whole lot of opportunity at the time in Ireland, I don't think. So yeah, raised around there. Actually studied in Dublin. I studied languages, and then I worked in France, worked in Russia. Early in my career, it was all really consumer goods, actually. But I think doing consumer, and mainly marketing, but I think doing consumer goods stuff's been interesting for what we're doing now, because definitely in terms of how we think about marketing and how we think about presenting our products and how we think about our product roadmap and go to market and that sort of thing, even though what we're doing is sort of more B2B right now, I think is really useful. And moved back to the UK in 2017. And I worked at a company called Crowdcube for a couple of years, which is an equity crowdfunding platform in the UK. I left there in 2019, did a bit of consulting work, and started working in corporate venture, which is sort of like corporates investing minority equity stakes in startups for Coca Cola European Partners, which is like the biggest European bottler and distributor of Coca Cola. Coke's interesting business model, but it's a franchise business. I spent about 10 months doing that, and meanwhile I was sort of like noodling on Odin, met my co-founder Mary, and we started bouncing ideas around and trying a few different things, and that sort of eventually evolved into what we're doing now.
Very cool. So can you tell us a little bit more then about the kind of creation story? Because I read an article which I think you posted on the Odin Times on Substack, which I'd encourage anybody watching or listening to sign up to. But can you talk a little bit more about that, the creation story?
Yeah, sure. So I guess the genesis for me was sort of like, I liked the mission and vision of what Crowdcube are doing. I think Darren and Luke, who founded Crowdcube, are great founders and have a great vision for things. I just felt there's a range of different problems to be solved there, and I wasn't sure if I thought there was a different way to approach it. And what I mean specifically there is like venture capital is really all about top quartile in terms of performance. So if you're not investing in the businesses that are in the top 20-25%, you're not going to make any money, because they're the only businesses that get to an exit, right? They're the only businesses that get acquired or IPO, and that's the only way you get liquidity. You tend to get a very high multiple on that top quartile, right? So you get this power law distribution, which most people in startup land are familiar with. So the problem for me is like, how do you access the top quartile assets? They're competitive, right? Venture's interesting in an asset class. It's the only asset class where the seller cares who the buyer is, right? So as a seller of your shares, as a founder, it matters to you who is buying those shares and why they're buying them, what value they can add, and that sort of thing. And that's very different to something like, selling your shares on a secondary market. Like if you're buying shares of Tesla on the stock market, you're buying them from someone else, and that person couldn't give a shit who that person is, right? Like they just want the highest price. That means accessing the startups that seem to be high quality, which isn't always easy to know, especially at the early stages, but there are also obviously some signals, tends to be quite competitive. So it's like, how do you get into those deals? And the problem with crowdfunding platforms is outside of consumer, they don't really seem to provide much access to those deals. So if you wanted to invest in like an interesting B2B SaaS business or a life sciences business or someone doing something clean tech or whatever, it's unlikely the top quartile assets will be on a crowdfunding platform, because if they are, they're more likely to be businesses that the VCs, family offices, and angel syndicates have already passed on. And that's why they've ended up on a crowdfunding platform. For consumer, it's different because people do it for marketing, right? Like Monzo, Revolut, Free Trade. If you look at European businesses, there's big consumer tech businesses who've raised a lot of money on crowdfunding platforms. So I was interested in solving that problem. And then as I delved deeper, I realized, okay, there's lots of other. So that was where it started for me, is like, how do you sort of index the private markets? And eventually, how could you offer like ETF-like products that give people access to innovation more broadly, right? Starting with venture, but eventually things like private equity, hedge funds, like all these other sort of areas where if you look at a family office, right, they've got a very sophisticated way of allocating capital that looks nothing like the way everyday people invest their money. And the reason for that is there are good returns in sort of diversifying your risk and having some exposure to that stuff. And then as we dug deeper, we realized there were sort of other issues. So like for emerging managers, it costs hundreds of grand to like start a VC firm, right? So it's very inaccessible in terms of the infrastructure. But yeah, I guess how we started was like, okay, let's try and index the private market. So we built like data and scraping tools. And then and we had a contract, or we had an agreement with like a private equity firm, that we were going to, scrape information on like, I think it was like beauty brands and like pet food businesses or something like that, and try and identify signals of breakouts. The idea for me was like, okay, how do we collect the data? But we realized quickly, like, we didn't really think the world needed more beauty brands or more pet food brands, particularly. It wasn't something that like really excited us. And also you run into this like labeling problem of like, it's actually much faster for a human to look at something and be like, that looks like an interesting business. If we're talking about pre-seed and seed companies, they can see the signals and process that information very quickly. So we set up a Slack community, and this was during lockdown, with like a bunch of sort of like founders, operators, angel investors. And we just started sort of sharing deals and rating the deals. And then the idea was, okay, what does people's collective intelligence say about the quality of the opportunity? Which of those businesses then go on to raise money? It was a bit like Product Hunt. That was the idea. But, obviously quickly people were like, we want to invest in the deals, but there's not really like a good structure for syndicating investment opportunities in Europe, really. AngelList basically have done this very well in the US. And that's what we sort of ended up doing. So, I guess that rolls into what we're doing now, which I can maybe explain in a few sentences. So we basically build tools for people to invest together in innovation. Our first product lets anyone raise money from their own network in a few clicks. So that could be for their own company. So founders use it to roll up lots of smaller investors and put them inside something called an SPV, a special purpose vehicle. So like a single legal entity that's one line on the cap table. And we also simplify governance. So for all those small investors, one person handles voting on their behalf. But then also angel syndicates use it, and sort of emerging fund managers. And we're launching like a micro fund product, so you can raise money to invest in multiple companies via the platform as well. And then you can charge fees. You can charge something called carried interest. So that's one of the main ways VCs make money. So it's a share of profits on exit to their investors. And then we take care of all the legals, the admin, the banking, payments, all of that sort of stuff. And then next, we're sort of launching like a people-centric marketplace, which will be a layer that sits on top of that fundraising tool and allows people to discover and follow different investors, apply to join their sort of private communities. People call them syndicates, right? An angel syndicate is basically a private community of investors, and then invest with them. And then we'll also give people the ability to discover and invest in funds. And we'll be using our SPVs as a feeder structure to collect lots of money from smaller checks, pool it, and invest it in that fund as a single investor, a single LP, limited partner, as they say in the game.
Amazing. Thank you so much for that context. So when you were going from this Slack group to trying to create an easy way for making this investment or these investments, you were saying that there is nothing really out there in the UK or the European market which would facilitate your needs. Um, without, I mean, you can talk about competitors if you want, or indirect competitors if you like, but what were people doing before Odin that, how were they solving the problem themselves before you guys came along?
So there were a few players out there. So Remy and Ulrich from Vauban, they'd started their business like a couple of years previous to that. I'd actually chatted with Remy, and what we felt was missing there was they were sort of targeting more like VCs. It wasn't very accessible in terms of price point. And then also, I think just philosophically, the way their business looks at things is more like a set of SaaS workflow tools for fund managers, rather than like building a marketplace, like a two-sided marketplace where you allow people to discover those managers and eventually sort of invest in other assets as well. So Vauban was available, but it cost at the time like $10,000 or $15,000 sort of minimum to do an SPV. So if you wanted to raise like 50, 75 grand, right, this was like us and our friends, right? So like the problem is, right, if you want to angel invest, it's not a bad idea, especially in the UK. You can get EIS and SEIS tax relief if you, right? So this is the government basically giving you money back. They have something similar in Ireland as well.
They do, yeah.
So the government's basically subsidizing your investment, right? SEIS tax relief is 50% of your money back, and you don't pay any capital gains tax. You're essentially applying 2x leverage to your investment for free, right? So there are great incentives there, but founders want like to deal with as few investors as possible. You don't want to raise money from tons of people investing £1,000, ideally if you can avoid it, right? So what you need is someone to like lead a syndicate, organize all the people who want to invest in the deal, and pool that money. But if in total you've got 50 grand there, if you're paying 10 grand in fees, just doesn't make any sense. So we realized there was a need for something more automated. And yeah, otherwise you could go to lawyers. There's also regulation, right? So like it costs 40 or 50 grand to become an appointed representative of a regulated firm, which you have to do in order to arrange deals. A lot of people just don't bother even doing that, and just there's a lot of angel syndicates out there just doing deals like technically illegally according to the FCA regulation, but I think the FCA turns a blind eye. This is the Financial Conduct Authority in the UK, because they've got bigger fish to fry than a bunch of fairly sophisticated people, putting some money in startups. But there's a whole load of barriers, right? The legal stuff is complicated, and we were just sort of like, look, how do you simplify this? And from the investor's perspective, or from the syndicate lead's perspective, it needs to feel a bit like Shopify, right? Like set up your fund vehicle in a few minutes, like you can set up a shop on Shopify and start selling products. And if you look at what Amazon have done with Fulfillment by Amazon, it's like all the admin, all the logistics, the flow of payments, everything is just happening in the back end. And I think what's exciting, I like that analogy, because if you think about how Amazon and Shopify really commoditized e-commerce and what that did in terms of like changing consumer goods, right? Like before that, big consumer goods businesses like Procter and Gamble and Unilever and these sorts of guys basically ran consumer goods, right? And controlled everything that was on supermarket shelves. Now there are hundreds, thousands of startup brands and people selling products online and that sort of thing. And our view is if you can do the same thing in financial services and really commoditize the infrastructure and make the tooling available to more people and make it more accessible, then that's a really good thing for sort of the speed of innovation. But yeah, that just didn't really exist in an accessible way before in Europe.
So what did you then first build in your MVP of Odin?
I didn't build anything. So Mary, my co-founder, is amazing. Sort of savant, genius, software engineer, product manager, basically very good at whatever she puts her mind to. Also good at piano and violin and lots of other things. So she built everything in a weekend, basically. So we spoke to a legal firm, got some basic legal documents drafted for the Bear Trust structure, which is the type of SPV structure that we use. And then we got our first customer. Our first customer was a guy called Alex McDonald, who's quite a well-known angel investor and founder in the UK, and did a deal. Basically, we weren't regulated at the time, so it was definitely on the edge of legal, but we got regulated very quickly after that. I mean, interestingly, some of our competitors still aren't regulated and are doing this at quite large scale. So there are gray areas and workarounds, but the interpretation of our lawyers was definitely, no, you guys should get regulated. And then off the back of that, we had traction, right? So that's when we were like, I mean, actually before that, we did a deal ourselves using Seeders, the crowdfunding platform. So we just said, can we use it and run it as a syndicate? So deal with me instead of dealing with the founder, and I'll handle the fundraising and stuff like that. And it was fine, but it wasn't really fit for purpose because it's a founder-focused product, and it was just overpriced. I think we did 75 grand on that syndicate, and they charged us sort of 7.5 grand or something like that, and the majority of the carried interest on the deal. And I was like, you guys have done no work. Like, why are you charging carried interest on investors that we've brought in? So we're like, there's got to be a better way of this. And I knew the legal structure from Crowdcube inside out, and I was like, this is simple. Like, we should be able to do this very cost effectively. So we built that MVP, and then off the back of that, we were able to sort of raise some money. And this was sort of mid 2021. So we closed a pre-seed round, £800,000 in September 2021, and sort of got to work basically. And then it's been all systems a go since then.
Awesome. So if somebody is signing up to Odin now and they're looking to raise money, so maybe a founder is looking to raise money, or an angel investor representing their syndicate is looking to create one of these vehicles, what can they expect when they sign up? And I appreciate they're probably two very different experiences.
Yeah, I mean, maybe a product demo would be the easiest way to do this. I don't know if everyone's going to be watching on video, but let me see if I can share my screen, or share a tab anyway.
Yeah.
There we go. So, can you see that?
I can now. Yeah, it's just loading up. There you go. I've got it.
Yeah, cool. So basically, they'll sign up. Right now, they have to fill out a form, and then we get in touch and give them access to the product. We're actually going to open up access pretty soon. Right now, it's sort of what I would call single player mode, right? So like eventually there'll be a marketplace, so you'll have like the ability to discover syndicates and that sort of thing in a separate tab. But right now, it's just deals you've been invited to, and then deals you've drafted. And if you're raising money, then you can see a deal that you're raising for. And if you want to create a deal, you can basically hit create deal and then hit raise funds for my company or launch a syndicate, and then you go into a flow where you can sort of set that all up, right? Basically, you're filling a bunch of information into a form that goes into our database, and off the back of the information you push into the database, we generate legal documents automatically. And then you get a deal page, you can invite investors, you can choose what carried interest and what fee you want to charge different investors. You ping them a link, and then they hit a deal page, they create their account, do some basic KYC, so know your customer, and AML, anti-money laundering checks, and then they can invest in a few clicks essentially. And yeah, that's it. So very simple for the time being. But I think this is the thing that's been an insight for me is if you do something simple, even if the product doesn't look sexy, if people really need it, they'll pay for it. Like our first MVP was like embarrassingly, sort of janky looking and basic, but they paid $3,000 for the deal or something like that, and we were like, wow, this is amazing, we're making money. So yeah, that's where it is right now. Our plan very soon is we're adding user profiles, we're opening up the sign up flow, and then we're going to add this sort of like discover tab so that you can apply to join Nick Hynes' syndicate, or whoever's syndicate, and join that community of investors. You'll be able to chat with other investors, share deal flow, all of that sort of thing.
That's very interesting.
So yeah,
I can't wait to see that. How are you acquiring customers or users of the platform?
So what's worked so far, we do a lot on community and content, I would say, like the two pillars. And then in the middle of, well, there's probably three, right? Community, content, and product. We're very lucky in that there's a nice product-led growth loop where, let's say a founder raises money with us, they invite 25 angel investors to the platform. One of them happens to run a syndicate, and then they're like, hey, I want to set up a syndicate. So we just get like a sort of an organic, there's like a nice network effect there, basically. Or it's more virality, I guess. And then on community, we run sort of like dinners and events and stuff like that, mainly in London right now, and really focus on sort of operator investors, we would call them. So sort of like founders, angels who've got previous operational experience in startups, because there's a real gap for this in Europe, right? Like sort of 92% of VCs or something crazy have never worked at a startup, let alone started one. So, and you know, if you look at that, it's almost the inverse in the States, right? So I think 63% have previously started a company or came from startups first. So it's a very different funding ecosystem. And you need both types, right? The people in Europe will tend to be more from like a private equity background or an investment banking background. Sometimes they've worked at McKinsey or BCG, management consulting. And that skill set's definitely valuable, but I think there's a need and a space for more operator investors. So we really focus on that core sort of target customer. The interesting thing about selling a product that's for people in tech is that, like, I mean, firstly, we're sort of like picks and shovels in a gold rush, right? Like, everyone wants to invest in cool startups. We're just selling a service that lets you do that more easily. And then the plan is we will also have an option, a call option on the gold, is the way I pitch it to investors, right? So if we introduce capital to deals, we also take some carried interest. So, but yeah, in terms of the acquisition, all those people talk to each other, firstly, and then secondly, if you look at any tech ecosystem, like if you look at London, there's probably 500 or 1,000 people who are like very active, very engaged, and like very networked, who are like key nodes in that network. And if you engage with them in sort of a soft selling way by doing community events and dinners and stuff like that, they go out and sell the product for you, essentially. Thank you to all those people, by the way, in our community who, a lot of them are our shareholders now as well, right? We brought a lot of them in as investors along the journey. That's also been massive for us. Like we've got about, you know, we sort of, you know, sing from our own hymn sheet, obviously, and we've got about 250 investors who've all come in through SPVs that we've set up, and they're a really valuable resource. And then now, so we've reached like 1 million run rate in terms of revenue, and then now we're starting to do more outbound sales as well, and figure out, on the basis of the profiles of people who are using the product, okay, how do we outbound? That's not always easy because it's quite a fragmented market and people don't always publicly signal that they're running a syndicate or angel investing actively, often because you just get tons of crap in your inbox if you do that, right? Not always crap, but you know, a lot of inbound from people that's hard to screen. And then we do content quite a lot as well. I haven't had as much time to push that as I would have liked. That's actually what I enjoy doing the most, is like writing, putting stuff out on LinkedIn, Twitter. We're going to try, you know, doing a podcast more regularly at some point as well. And that's good for building your audience and building reach. But yeah, I actually think probably where we're weakest is outbound sales. We haven't done any sales really. And so that's where we're hiring at the moment.
When you look at the deals that have been done and the startups that are raising on the platform, what are some of the cases that stand out to you? What are some of the, you know, hallmark cases or landmark cases that you're saying, you know, this is a really good example of where Odin has worked really well for the parties involved?
Yeah. So I think in terms of delivering on the mission, right? So it's sort of like giving people access to investment opportunities that are likely to be top quartile. It's been exciting to partner with a guy who did Y Combinator, and then we've raised a bunch of money and invested in demo day Y Combinator deals, actually before VCs. So people have joined that syndicate and invested in like 25 Y Combinator businesses.
Could you elaborate on that? Because I actually read a LinkedIn post by you where you talked about how you were able to raise $1 million based on a tweet and an email.
Yeah. So wrote a Substack post where I broke down the success of Y Combinator, basically, just collecting information from the internet, not really coming up with anything, just, all the data's out there and all the information's out there. And I turned that into a tweet thread. Then the tweet sort of went viral. Got like, I think about 900 likes and a bunch of retweets. So, semi-viral. And again, right, like tech networks and ecosystems are very dense. So everyone who was like liking and retweeting that was like people who are founders, operators, investors, like our target demographic, right? And then we also obviously have a pre-existing network that we've built over time of people who are interested in investing. Everyone wants access to YC deals. And we basically said, look, there's going to be 15 deals. You can just commit minimum of 1K per deal. So $15,000, which is quite a lot, but, reasonably accessible. If you're going to sort of make a passive bet on venture, it's not a bad place to start. And you can just commit to invest in all 15. We'll prioritize the people who commit to invest in all 15, basically. And we worked with, so I handled that side of things. And then Jeremy Hindle, who founded a business that was backed by Y Combinator, and he's now got a startup studio, sort of incubator, runs a few businesses. He handled actually a lot of the hard work, which was like vetting the companies, selecting, talking to like 50 founders, whittling it down to like the 15 that we really liked, and negotiating an allocation in those deals, which isn't always easy, right? Because especially with the hot deals at Y Combinator, you're competing with, good funds to get into those deals. Luckily, we were writing small checks, right? Like 70K or something like that. So we were able to sort of squeeze our way in. The other good thing about YC is they have this very powerful sort of like alumni loyalty. So because he was an alumnus, because he's like well rated internally on Bookface, which is like their internal social network, founders were happy to take our money. So yeah, I sort of coordinated the fundraising, and it's very easy to do that when Y Combinator is the story you're telling, right? It's sort of like selling sweets to kids, right? Like it's not a hard sell. And then Jeremy did a lot of the hard work of coordinating. And then I should also shout out Alex, who's on our growth team, who did a lot of the operational work of corralling all the investors, chasing people up, reminding them to send their payments, that sort of thing, which is one of the more challenging parts of running an angel syndicate.
Well, that's a really excellent success story. And I'm sure a lot of people are going to find that very compelling. When you talk about what happens next with Odin, you were talking about some of the upcoming features or aspects of the platform that you're going to be developing, such as the marketplace. You're also going to be growing out the team. Can you elaborate on that for anybody who may be watching this and is interested in making a move? What are you looking to grow out?
Good question. So we need a head of product. Mary's basically been doing a lot of the product stuff, and then we moved Tim, our founders associate, into product for a while. Now he's back doing more operational stuff, and yeah, we'd like someone quite experienced on product, so Mary can sort of get out the weeds and spend a bit more time on strategy and culture and hiring. We're hiring in engineering, so senior engineers. We need a tech lead and an engineering manager. So a tech lead would be, more of a sole contributor, individual contributor who's a very, very good technically, especially on back end. We build in Golang, and this will probably be gibberish to most people, but anyway. And then an engineering manager, so that's more of a management and leadership figure with the potential to evolve into more of a CTO role eventually. And then on the operational sort of non-product side of the business, we'll be hiring a head of business development. So I'd like someone ideally with experience in venture, but then also operational experience in building a startup from, 10 employees to 30 employees, like that sort of stage of the journey. And ideally experiencing like something similar. So like a marketplace where you're building workflow tools for one side of the marketplace, and that's more of a B2B sell, but then there's also a consumer side of the marketplace. But that'll be more of a sales role. They're the near-term roles that we have. We'll probably hire someone in operations to do more of the plumbing and finance and that sort of thing. Later this year, we'll probably hire a legal counsel. We outsource all our legal for now. It doesn't really, even for us, make sense until we reach big scale to bring in like a full-time lawyer in-house. And then we're also always looking in other areas. So customer success, actually like a good customer success person with decent experience is also something we would look at, which I think is actually quite a hard role to fill, because it's not always, it's sometimes a bit of a thankless task, right? Like dealing with aggrieved customers and that sort of thing. But people who are really good at it and enjoy it are so valuable, because delighting your customers is the most important thing. And it's really, I think, the difference between good businesses and great businesses. I'm a big follower of Jeff Bezos's customer obsession is one of his core values. And if you ever watch any videos of Bezos, he'll say like the word customer like 15 times in like a 3-minute video, right? And he's right? Like if you can always just think, how do we build something that our customers really like, then you can't go far wrong. And I think a big part of that is people and how your team treats the customer.
I totally agree. I always think as well, tech is a people business. And that's something that we can sometimes lose. And with regard to customer success,
business is a people
well.
business.
Yeah, exactly. And customer success people, I think you're right. It can be kind of a thankless task, but actually they're so key to the reputation of your business, and indeed as well retention of the customers that you've fought so hard to acquire in the first place.
Yeah, I think the other challenge is, like, I saw another good tweet. It was actually by, what's his name? He's the co-founder of AngelList, not Naval, but the other guy. He's called like Babik Nivi or something like that. I can't remember his name. Anyway, he was like, successful startups basically hire people who are way too competent for the job that they're doing. And I think that's like an interesting insight. Like if you have someone who's quite overqualified for the job they're doing, they're going to do a really good job of it. And sometimes it's those jobs that are like a little bit in the weeds, where it's like, especially early on, it's really important to get those things right, so that once you bring in junior people, you've built like a really good process, and the person who's built that process really understands what they're doing and has approached it thoughtfully with the customer in mind.
Odin is all about fundraising. You've talked before earlier on in this call about you raised 850,000. That was pounds, wasn't it, that you raised before?
So we raised £800,000 pre-seed,
800,000
yeah,
pounds.
and then we've yeah. We're just closing a seed round at the moment as well.
That was going to be my question, actually.
Almost wrapped up.
Exactly, that was going to be my question. What are your fundraising plans there?
Yeah, so we've basically closed it all from angels and family offices in our network. Like, we're very lucky, in that we're a fundraising tool for angel investors, so it's sort of the perfect business to be when you're fundraising. So I don't think we're necessarily a good signal for like the market or how easy it is to do this right now. We've done it all from them. Strategically, we decided it was like actually smart and a higher priority to have as many of our customers on board as investors as possible. That way they're more likely to engage, they're more likely to work with us, they're more likely to refer people. They really help sort of like embed a stronger network effect into what we're doing. I would say that I believe that logic applies to like almost any business. So in terms of fundraising, if you're at pre-seed and seed, I think the first place to start is not like, how do I find random angel investors, right? It's like, go and speak to your customers, go and speak to your former colleagues, like people who understand you, know you, trust you, and most importantly, rate you and think, I think Nick is a really competent person for this and this reason, and I back him whatever he's doing, right? And I think if you can raise that initial tranche of funding from those people, which is how we started, then that's a really great way to kick things off. Like when we did our pre-seed, it was mainly like our community. We went out to that community we built on Slack, and then they started referring people in, and that's how we opened doors to bigger ticket angel investors and people who were more established. Because venture is really all about people and relationships, and people are busy. So in terms of deal flow, they want stuff to be like high signal, and that means if it's a warm introduction from someone they trust, they're way more likely to take a look at it, take a call with the founder, and then potentially go on to invest. Whereas if you're just like cold outbounding people, I don't think that tends to have a very good hit rate.
I think that's really solid advice. Is there anything in particular with regard to the current market conditions that you see and you would be giving advice to other founders who are looking to raise at this particular time?
I think go and read everything Paul Graham has written, firstly, is like the first bit of advice I would give any founder. So Paul Graham's the founder of Y Combinator. I think the main mistake startups do is they start fundraising before actually thinking, are we building something people actually want? Can this business be big? Am I doing this for the right reasons, right? Am I doing this because I believe in the problem, or am I doing it because my friends are doing it? I think it'd be cool to be a founder or cool to own a startup or whatever, right? Like, so firstly, your why needs to come from a place of like, you really, I think it's better. I don't buy too much that thing of like, you have to be passionate about what you're doing, right? You can be passionate about the process. And like there's a quote from like Rockefeller or someone where he's like, I don't love money, I love the making of it. Which is like, he enjoys the process of making the money, but you need to enjoy that and get energy out of it. Otherwise you're going to burn out when things are difficult, right? They're not going your way. And so I think, always start with why, and then the what. You need to really ask yourself, okay, do people really want this? Is there pull? Like, even at pre-seed, you need like really strong evidence that people are willing to pay for what you're selling, right? Like before we raise, especially if you don't have much track record, which, we didn't when we raised our pre-seed. So we already had a paying customer and that paying customer had already said, I will invest in this business if you build it. So we had very strong signal and that was mainly a market problem, right? It might have been because they also thought, Mary and I were compelling founders, but, you need both, right? But like, I really think people underestimate, like, you just need to demonstrate clear market need and demonstrate people are willing to pay for what you're selling. And then the third thing is, once you can demonstrate willingness to pay, it's like, are you growing? So if you read one piece by Paul Graham, there's one that's called Startup Equals Growth. That's the name of the blog post. And he's like, look, basically the only thing that matters in startup is how fast are you growing? Because that's the only difference between running a startup and running like any SME, like a consulting business or something like that. A good startup, when it's very early on, will be growing like 7% a week, I think is the stat. So, monthly, because of compounding, I think that's about 35%, which is pretty fast, right? Like, that means if you do 1K 1 month, you're doing 1,300 quid the next month, and within a couple of months you'd be doing tens of thousands of pounds. So you need to figure out what metrics are important, and then show that you're growing meaningfully in those metrics, which means you're showing market pull, right? So rather than you like pushing your product out into the market, there's real demand, and that's a really early indicator of product market fit. And I would say don't bother fundraising until you've thought about those three things, right? So like, why am I doing this? Have I got someone who's willing to pay for it? And am I growing fast? If you can solve those three things, fundraising is going to be easy. Then you can start thinking about storytelling and blah, blah, blah. But like all of that stuff, pointless if you can't like just show that you have something that can be a big business.
I think that's fantastic advice. Thank you so much, Paddy. So we're running up towards the end of our conversation together. But I always like to give this time now as an opportunity to founders to talk to the audience about any maybe call to action that they would like for the audience to take, or how they can get involved.
Yeah, sure. So, I mean, look, anyone who's interested in using our product, feel free to ping me an email directly. It's paddy@joinodin.com. And I can loop you in with one of the team for a chat. You can also check out our website, joinodin.com, for more info about what we're doing. And yeah, I encourage you to reach out, and we can have a chat and see if we can help you.
Awesome. Paddy, thank you so much for coming on the show today. I really appreciate it. I think what you're doing with Odin is really fascinating. You're fixing a lot of problems in the space, and I can't wait for even more deal flow to be coming through the platform and building the next generation of businesses out there. So thank you so much again, Paddy.
Thank you, Nick.